Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry, and Happy New Year.
Happy New Year, Jim.
Larry, where is American Manganese going in 2020?
Well, it's looking like an exciting year for the company, and I think it's an exciting year for the market. We're seeing a lot of strength in the markets in the last week. So, looks like the venture exchange has broken out, and, led by gold, which is making highs every day, and I think it was the last I looked was 1550. So, it's going to be a very exciting time. Technology stocks are going to be booming, and of course, we're deep in the center of that. So I see a real good year coming, and I know a lot of people are saying, "Look out! It's going to get, you're going to get blindsided." But we've just gone through a big warrant exercise, and so we have a good treasury to get things started in the new year, and we're looking forward to it. Work is ongoing at Cometco with the skeleton crew. They won't be back to full force until next week. And, they're working away on the DOE scrap material, not scrap, but battery material. And, we're looking forward to meeting with Cometco early in the week to lay out the plans for what we'd call a PIA and mining, preliminary economic evaluation, which will give us better numbers and better timelines. So, that's a big positive, and I want to just say that today we're going to have a look behind the curtain. Management and the company has been criticized because we haven't done a deal yet, but it's not quite mature enough. Any project out there is not mature enough to bring in the big bait. But aside from that, if we'd have done a deal earlier on, there's a few things that could have created problems for the company. First off, when we were looking at the scenario for batteries, there was what they called the tipping fee. And if you were a manufacturer of batteries, or if you were the DOE or the Department of Defense or any of those ones, you had to pay a scrapyard a $4 to $7 a pound tipping fee to take the battery. And so the scrapyard would get, $4,000 to $7,000 in the kitty right away. And then, of course, they'd dismantle it and probably ship it off to a smelter. So, but today, it's a different story. The scrapyards have to pay for batteries. They have to pay for scraps. And so that's a big turnaround in what was going forward back in 2016 and 17 to what's happening today. Instead of getting money in immediately, you got money going out immediately. So that kind of tips the scale a little bit. So what's that tell you? It tells you that you have to work on efficiencies. And efficiency means that you've got to have a better method. You've got to have a cheaper cost than any competitor may have. And that's what we've been doing. We've got our patents, and we're developing a third patent, and we're reducing the costs of reagents, for example, and throughput for another example. And, so that puts us in the front tier, or you might say a tier one, in as far as battery recycling goes. Because without those efficiencies, you could find yourself into trouble. Now, if we'd have done a deal here even a year ago, we would have been working with numbers that were much higher in the batteries for cobalt. And now that's been reduced down considerably, the cobalt has. And so that changes the whole dynamics of any deal that you make. So now, with efficiencies, we're able to still see a lot of blue sky in what we're doing. And so that's not bothering us too much. But a deal with a supplier or or somebody who would give us the scrap material or the manufacturers has to be well thought out. And, you try to see what's coming around the corner. I don't think we saw that cobalt was going to be reduced so much as it has been in order to reduce the battery manufacturing costs. So, that could have been a real trap for us. So, you got to look at all these things. You've got to try to corner a market. We know where there's scraps. We know where there's scraps all over the world. We get offered scraps all the time. And, but there's a cost to it. And you can't go into a deal spending too much money for scrap and then finding out that, the chemistry's changed, the price has changed, and you're looking at a different set of dynamics at the end of the day. So you have to be very careful. And we haven't done a deal, and we don't plan on doing a deal until we got everything nailed down. The unknown is the unknown. But the expectations of things changing are certainly in our sights, in our immediate sights. So we see changes. We've seen so many changes in this business in the last 3 years that a deal made even 2 years ago may have been harmful to the productivity of the company. So people that are saying, hey, why haven't you done a deal yet? Well, first off, we haven't done a deal because the battery manufacturers don't feel the timing is right for them. And secondly, we're probably not prepared to actually sit down and put into paper hard costs of what it would cost us for the material and then what we get back for it, because they'll be looking for reductions. So, there's a lot of things to look out for. You can't just, it's not something that is out there. There's not a pattern of recyclers that you have, you can follow on doing a deal. So here we are. We're very happy with our results. We're very happy with our progress, and we're looking forward to a great 2020. So but you have to remember that the landscape keeps shifting, and we don't want to, be premature in doing something that could hurt the bottom line down the road. When we first got involved in this, it was pretty simple. One of the big battery types of batteries out there was the lithium cobalt, and so that was nothing but money. But the price of the cobalt was $10,000 a ton. It's 3 times that today, but the amount of cobalt is down about 90%. So one partially balances off the other. So it's something that we have to consider as management. We have to be prudent. We can't be stampeded into doing a premature deal that could hurt the growth of the company down the road. And looking at that, I would sure like to be able to put our first demonstration plant in with our own money, and that would give us a real pivot point to either do some basic deals down the road with battery manufacturers, recyclers, people interested in making money, companies that see this as a big opportunity. And I think, that we may end up with a company that sees this as a big opportunity. And so we're going to dot our I's, cross our T's, and, keep a close watch on everything that's happening so that we can capitalize on what we're doing. Now, it's not just the environment. Certainly we'll be saving the environment. We'll have a closed circuit process that lets nothing back into the environment. And but it also has to make money. If it doesn't make money, it's not going anywhere. And so that's the idea of all this research and development, all these patents. We've applied for patents in 7 other countries, and to protect us and protect the shareholders. So, that's kind of the way we're going. Now, I've attached some articles to this podcast, one of which was done by an actual recycler. And so they probably know more about that business than anybody else does. And their title was Battery Recycling Matter of National Security. And I like that because that is what the U.S. is all about. And recycling should be high on their list. But they did make a quote in there that, that half the cost of the cathode materials for the battery was the raw material. And the other half was the treatment of that raw material to make it cathode ready. Now, as you know, we've been talking about cathode to cathode, and which means that our product at the end of the day, like we did for the Tier 1 companies, is high purity, very high purity cathode material. That's going to save the battery manufacturer a lot of money. And so there's a lot of incentives for them to do something with this, and we're looking forward to something happening in the near term, or, sometime this year anyway. So that's kind of what my podcast is all about today.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that has a strategic deposit of manganese in the U.S., and a process for treating very low grades. And that process was the cornerstone of our technology for the battery cathode materials now, so it's nailed down twice. And so we've got 2 patents and a third one that will be applied for. So we're definitely looking at mining batteries. And when I say that, we're talking about recycling them in a manner that is not harmful to the environment and could be very profitable for the company. Now, we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt under the symbol 2AM. We have a great website out there, AmericanManganeseInc.com, where you can do all of your due diligence. You could go to our pro forma business plan on a 3-ton per day plant that would be a demonstration plant, but could also be very profitable. And you can reach the company by phoning 778-574-4444. You can email me at LREAUGH@AMYMN.com.
Larry, have a Happy New Year.
Thanks, Jim. Have a Happy New Year.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on January 3rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.